Hey everybody, thanks so much for joining us. Today we're going to talk about two stocks that I currently own 100 plus shares of each that I am no longer going to be selling covered calls against for 2023. If this is your first time joining this channel, thank you so much for making it out. My name is Wayne Nichols. A brief background about myself. I retired in 2020. And along the way, I was so fixated about getting to the end of my law enforcement career, collecting my pension, that I lost sight of really working to develop multiple streams of income. So I've since gone back to work full time. I'm maxing out my pre-tax contributions. I'm working on building out my dividend portfolio and generating income by selling covered calls. So I'd love for you guys to subscribe, follow along on my journey as I work to build generational wealth and right the wrongs of my past where I didn't save more money in different areas to, again, build multiple streams of income. So in 2022, I sold a lot of covered calls. And amongst the covered calls I sold was for Verizon and Bank of America. Let me tell you why I'm no longer going to be stressing about selling covered calls against these two companies, and nothing against them as far as owning the shares of each stock. But not all stocks are created equal when it comes to selling options. And I learned that the hard way. So if you do have an interest in selling covered calls, implied volatility is something that you need to understand. And I didn't learn this until about a few months into selling these covered calls. So let me go ahead and read this verbatim. Implied volatility represents the expected volatility of a stock over the life of the option. As expectations change, option premiums react appropriately. Implied volatility is directly influenced by the supply and demand of the underlying options and by the market's expectation of the share price's direction. As expectations rise or as the demand for an option increases, implied volatility will rise. Options that have high levels of implied volatility will result in high priced option premiums. And all this really means is if you own a stock that pretty much trades sideways, right? It's steady as a rock throughout the year. It doesn't have these wild swings, whether they're up or down. You can pretty much rely on not collecting these juicy premiums. And two stocks that come to mind is Tesla. Tesla throughout the year has had some wild swings. And if we were to look at the option premium that I have collected this past year, I've made a lot of money selling these Tesla options. But let's go ahead and take a look at two stocks that I currently own in which I attempted to make a good run at selling options against, and it just didn't work out. So with Verizon, let's start off with I currently own 100 shares. Current value of Verizon per share is $41.85. That's the current stock price, I should say. And again, I own 100 shares, and I got really lucky, guys. I was able to buy in with an average cost of just under $38. Now, if you know anything about Verizon, this is considered a real gem of a stock in the dividend community. And so earlier in 2022, I wanted to get my 100 shares of Verizon, not only for the dividend, but also to sell options against. Well, let's go ahead and take a look at how I did in 2022, and I think this will make you understand as to why I'm no longer interested in selling options against Verizon. So here we are. My very first option that I sold for Verizon was in March of 2022. And look at this. I earned $25, but yet this stock was assigned. And I remember feeling absolutely devastated. This was before I really learned how to properly roll an option. And so my strike price first was $51.50. I think maybe I made $25 on that entire transaction, not including the premium that I received. But guys, guess what? It's the best thing that could have happened to me with this stock getting assigned. Because going back to the chart here, you can see in the last year, Verizon has fallen nearly 22%. So if I had held on to that stock at the current value that I paid, which I think was about $5,000, $50 a share for 100 shares, I would still even today be at a loss. But again, I wanted to buy Verizon because I thought I can make some decent money in selling covered calls. And of course, I wanted to hold on to Verizon for its very nice dividend yield, which, by the way, if we scroll down, currently is at 6.15%. So I got really lucky. This is currently about my dividend yield, and I'm going to hold on to Verizon. But if we add up how much money I made in 2022, you can see here, guys, I'm at a loss, right? In the lower corner here, I'm at a loss of $4 for the entire year. And this really comes down to implied volatility. Before I became more knowledgeable in IV, I didn't really understand how much of an impact it had on the premiums that I was able to generate. And you can guys see here, what I was able to do is, even though this was assigned in late March of 2022, when the stock prices continued to fall for Verizon, I was able to eventually get in and buy my 100 shares. And this was about November of 2022. But rather quickly, I realized that the premiums were just not, juicy. It wasn't worth it. And so one of the last covered calls I wrote was in late December. It expired the first week of December. And I could see that I was about to lose my 100 shares. And so I went ahead and took a loss of $33 for this last transaction. And so that's ultimately how I averaged at a net loss for Verizon for the year. And it just made sense to me at this point. It's better of a stock for me to hold on and collect the dividend and really work on the long-term growth of the stock. So remember, guys, if you are going to buy a stock, right, not all stocks are created equal. Not all stocks have the same implied volatility. And that is something that you need to explore before buying 100 shares. Let's go ahead and take a look at the next stock that I am no longer going to be selling covered calls against, and that is Bank of America. Now, again, I am going to hold on to my 102 shares of Bank of America, and I'm going to hold on till at least I get back to profitability. Right now, guys, I have an unrealized loss of nearly 12%, so I'm down about $500. Current stock price is $35.21. My average cost per share for the 102 shares is $39.90. So I've got a little ways to go before I break even. And if you see in the last year, right, Bank of America, like many banks out there, saw some red, and I'm currently down about 25%, or I should say Bank of America is currently down 25%. Let's go ahead and take a look here at the spreadsheet of all of the Bank of America calls. And one thing I want to point out before we jump into how much I made in option premium for Bank of America, I want to go back to those statistics, right? And those I mentioned in an earlier video. These are all of the covered calls that I sold in 2022, a total of 596, just about 23,000 in premium income, not bad. And I broke down the stats in which, right, 596 covered calls. I wrote those across 40 different stocks, and then I kind of break down, right, how often I was able to close out those options early, how many of them expired worthless, how many times I had to roll. And this was the number I want to focus on, right? 3. So 3 of those transactions resulted in a loss for me. And let's go back to Bank of America, because I want to show you exactly what happened with my Bank of America shares. I owned 300 total shares of Bank of America. I was able to accumulate 300 shares. I think by the middle of last year, I was selling options against 300 shares. But unfortunately, I made the biggest mistake you can make when it comes to selling covered calls. And the number one thing you don't do is sell below your cost basis. And what that means is if I paid $50 for ABC stock and the current share price of ABC is $40, you do not want to sell a covered call below your cost basis of $50. But inevitably what happens is if the stock is upside down by that much, well, you're not going to be able to generate premium depending on how underwater you are. And so what you can still do is sell a covered call against your shares, even for less than what you paid. And that's exactly what I did. And so 3 times in 2022, I was assigned, meaning I had 100 shares of my stock called away. It happened to me 3 times. 2 of those times was on Bank of America. The other time was on HPQ. And one of the reasons that I, lost these 100 shares is it became nearly impossible to roll that position to a further out date for a better strike price. And that also ties into implied volatility. So if you get upside down in your position, if the implied volatility is a low percentage, that also means you're going to have more difficulty with rolling that current position. So you can see here, it's not everything's great, right? I made some decent money last year selling covered calls, but I have to factor in my loss. And on these two positions, right? So these 100 shares of Bank of America, I took nearly a loss of $700. On this other covered call where my shares were called away, I took nearly a loss of $800. And so you also want to make sure that you're keeping track of all of your cost bases. And it was a learning lesson for me. So let's go and take a look at how much I made altogether selling covered calls for my 300 shares for Bank of America. And if I scroll down and highlight all of my net premium, you can see here in the bottom of the screen, I made a total of $297. Now this was selling a total of 40 covered calls. So again, a lot of work for only generating about $300 in profit. And when you factor in, right, the two positions in which I took a loss of nearly 700 plus 800, that's about $1,500. I'm still upside down as a whole. So right now, I'm going to hold on to my Bank of America shares. I'm going to hold on to my Verizon shares, but I'm going to go ahead and push those over to my M1 Finance account. I would rather have those dividends go to work for me. And even if I do have a long-term plan to sell my Bank of America shares, which I think I do, I need to wait for this to become profitable before I part ways with those 100 shares. Now, the real question is do I say, not only do I want to break even, but I also want to see if the 100 shares I currently own, if I can actually generate, $1,500 of share price appreciation, and that would truly put me at a break-even point. So some considerations to keep in mind, right? Not every stock is meant to sell covered calls, and one thing that you need to familiarize yourself with is implied volatility. The lower the implied volatility, the lower the premium. But from my experience, it also means if you were selling a covered call and the stock price goes above your strike price, it is going to be more difficult to roll that position plus generate positive net premium income. And that's what happened to me on Bank of America. So I hope you guys learned some good information. Make sure that you guys are doing your own research when it comes to selling covered calls. Again, nothing against Verizon, nothing against Bank of America. It's just not going to be stocks that I am going to sell covered calls. But guys, I am excited about Verizon's dividend percentage, and I do feel that I got really lucky by having that first covered call being assigned, meaning those 100 shares were called away. So now, if anything, this is why I don't want to sell covered calls against Verizon. I don't want to chance those 100 shares being called away, especially since I have a fantastic cost basis, right? $37.96, right? I'm up nearly 10%. And considering that Verizon is down nearly 22% in the last year, I'm really hoping that I'm going to hold on to Verizon for the long term, collect those nice dividends. And, if Verizon, appreciates even more, I can make a decision much further down the road as to whether or not I want to sell my shares for additional profit. Guys, do me a favor. If you like the content, smash that ever coveted like button. I hope you guys are enjoying the ride as I document my journey. Some more content coming your way. We'll see you guys in the next one. Thanks so much.